Now we've introduced this big issue over the past couple of days of corporate margins from Walmart to Target and who knows who else at this particular time. Dow's down just about 840 or so right now.
Yeah, I think that Walmart and Target, tell everybody that, once again, even the most sophisticated companies are behind the eight ball, and that, what did Brian Cornell say? They have $1 billion in incremental cost from transportation and, inflation cost. And obviously their inventories are building in technology. And so, this is the year of the Fed. Anyone trying to fight the Fed, I just think it's futile. The Fed will win every time. And that's what's going to be frustrating, I think, about the next few months, maybe next 3 or 4 months, as the Fed continues to talk incredibly hawkish, and that now you have, profit margins, to me, are what the big sell-off are today, is that, analysts were still really bullish on earnings, still bullish on profit margins, but when you have 400 basis points of degradation from Target, from profit margins, I mean, that's a huge degradation there. And so I think you're going to continue to have different sectors have their knees cut off. And, outside of energy, which has held on really well so far, there's been no place to hide in terms of having a positive return this year. But I would just, investors need to be patient this year, not have a trigger finger, because once again, the Fed is adamant to slow the economy. That means they want the consumer to slow down. They want the companies to slow down. They want unemployment to go higher. And the market is pricing all of this in day by day. And that's why you're going to continue to see multiples come down. And it's going to be a choppy year, which I think probably ends the year negative, which I felt that's a high probability of a zero or a negative easily at the end of the year.
I mean, Powell's trying to tell you that. Some people might not want to listen, might not want to hear it. But Powell's telling you, and he did yesterday, that he's ready for a fight. And he's going to punch and punch and punch until he knocks inflation out, whether some people want to believe it or not, because his comments yesterday was about as hawkish as they've been to date in that interview, the Q&A that he did with the Wall Street Journal. The issue, obviously, there it is. Well, what we need to see is inflation coming down in a clear and convincing way, and we're going to keep pushing until we see that. And he said that among many other things, but that's the gist of it that gives you the flavor of what the narrative is after he said all of that. Then you get Target CEO Brian Cornell talking directly about what the Fed chair is trying to fight, this crazy inflation, and what Brian Cornell is trying to deal with, $1 billion in freight. The forecast there, it's an astounding number, which Cornell says things have changed from even 13 weeks ago. Sure, the product mix may not have been right. He said the consumer started to shop differently, but then he owned it. We didn't project properly. We own that. I own that. I mean, it's about as contrite as you've ever heard a CEO be on television after their numbers are bad and the stock really dictates what they're going to have to do in terms of their messaging.